while there's nothing really worrying the markets right now into year end, once we get into next year, it may become a little bit more challenging environment. So we need to be a little bit prepared for that. Here's what you need to know before the bell. Good action yesterday in the markets. And again, we had this, we had talked about how the post-election rally had gotten markets very deviated from the 50-day moving average. And as always is the case, is that when you have those big deviations, you're going to get a pullback in the market. It's like gravity, as we've talked about before. Came back down, tested the 20-day moving average 3 times. We did it on on Friday, Monday, and Tuesday. Came down, touched the 20-day moving average, bounced right off of that, and then closed higher. So far right now, we've got a good kind of successful test of the 20-day moving average. Futures are pointing higher this morning, so we should get a little bit of follow through here. We do have a sell signal here in the short term. Now, again, sometimes these sell signals occur, but they're very limited. In fact, we can kind of come back and look at, back in October, we had the market come down, test the 20-day moving average, triggered a sell signal very temporarily, then the market bounced off the 20-day, continued higher, reversed that sell signal. So again, that can happen at these high levels. We can kind of flip back and forth a little bit with these shorter term moving averages. So all it suggests is right now is that the upside's likely limited until you get back onto that buy signal, and then the markets can kind of make its move higher into year end. But again, I just caution you is that over the next week or two, expect a little bit of volatility because of the holiday shortened week. And then we've got mutual fund distributions, as we talked about the other day, starting in the second week of December. So it's not going to be just smooth sailing into year end. To expect some bumps along the way, but the market should end higher than where they are now. In fact, over the last, kind of over history, whenever you have a 20% return year by November, which we've had, about 80% of the time the markets end even higher than where they were by November. So again, the kind of the year-end positioning for a move higher here is important. Now, there are some caveats to this. The amount of exuberance, if we take a look at equity positioning by professional managers, it's gotten very bullish very quickly. Asset allocations by investors are at all-time highs. So everybody's in this boat right now. And in fact, if you take a look at money flows into equity markets, we have the highest flows in history ever into the markets right now. So everybody is invested in the markets at the moment. There's an old saying about when everybody's in the pool. Well, everybody's in the equity pool right now. So that is some risk that not necessarily in the near term. In the near term, when everybody's in and everybody's buying, right? That's momentum, and that drives prices higher, which is what we've seen going on. But the other side of this risk is that when we get into next year, if everybody's already bought, who's left to buy? That's going to be the big question because, again, we've just had this really large move over the last 2 years. In fact, if we just kind of go back and look, this has been, quite the trip since we really saw the markets back in October of last year. We came off that kind of bear market in October and have just had this really accelerated kind of 45-degree rise in the markets over the last couple of years. That's not abnormal following a big 20% drawdown in the markets, which we had in 2022, but it's just been a very accelerated rise here. So again, just a lot of exuberance. And again, I just want to caution you that while there's nothing really worrying the markets right now into year end, once we get into next year, it may become a little bit more challenging environment. So we need to be a little bit prepared for that. So as we start getting closer to year end, we'll talk about year end rebalancing, positioning, those type of things. But we'll get more into that once we get into December. But that's what you need to know before the bell this morning.